Welcome back, ladies and gentlemen, on this triumphant Tuesday for what is going to be nothing short of another jam-packed daily market update. And as always, we have a hell of a lot to get into. We're going to be starting things off with a little bit of news out of China. Now, we know the Chinese government has committed to stimulating their economy through a number of different methods, whether that be lowering interest rates, refinancing or remortgaging. Essentially, I think it was $5.4 trillion worth of debt, or whether that be through actually directly buying ETFs. And on the back end of all this, Chinese housing ETFs have done very well, and Chinese sort of equity ETFs have done well. But they've had a bit of a pullback, and this has led all the bears to come out the woodworks. However, we're going to be sort of telling you guys to hang in there with the likes of the Hang Seng, because ultimately we think just in line with global liquidity, it's got a good time ahead of it. And the beautiful thing is when we look macro view, we come up with a bullish conclusion. And then when we look at the charts, they're aligned in regards to being positioned ready for what we think is to come. So we're going to start the video off there. And then we're going to be talking about the $16 billion in repayments, and it's in cash that is set to take place on the back end of the FTX bankruptcy. This is breaking. The plan has just been approved by a judge. So that's $16 billion that's likely going to find itself back into the cryptocurrency space. Maybe not all of it, but I think a good part of it, as those people would have been invested in crypto. Some of them are actually getting paid back more than what they originally had in play. I'm starting to think those guys that were buying all the bankruptcy claims weren't as dumb, or certainly knew something in regards to what the greater plan here was. I think the whole FTX thing was very, very suspicious. You guys know by now I'm a very conspiratorial guy, and I think it's the people that don't believe in conspiracies that are crazy, not the people that do. I'm probably going to upset some people by saying that, but we're going to say it anyway. So we're then going to be taking a look at MicroStrategy. We did look at MicroStrategy, the US 100, the S&P, NVIDIA, all going into FOMC when they did the 50 basis points like we were expected some of the few to be calling that. And ultimately, they're all progressing in the right direction. And we've related the short-term patterns that we had with the markets in regards to Israel-Iran. So we don't think this is going to escalate, because the markets are positioned to go higher, and they're not going to be doing that on the back end of an all-out conflict. People always, I don't know why humans are like this, but they always want the worst situation to happen, even though a lot of them don't realise, and maybe this is why, because some of them might not have money in the markets, that, you know, it's horrific. It's like, I remember, you know, before I bought my first house, kind of getting on board in that bandwagon of, oh, house prices are going to crash because they're really overvalued. Well, I didn't really know anything. There's a lot of people out there. Don't be that millennial waiting for house prices to crash. Go and get out there and get the money to buy one, and don't rely on something that may never come to be the reason why you win in life. So we'll be looking at that, and then we're going to be going back to what we looked at yesterday in regards to Eric Balanchunas. We were some of the first people to highlight the BlackRock talk. There's now been a clip that's been leaked from this. We're going to show you information that Bitcoin is being adopted significantly faster than the internet. And of course, BlackRock also chiming in on this. I'm just going to load my Bitcoin chart up. I don't know why I haven't got that up. BlackRock chiming in on this, and we're going to be playing you the clip from BlackRock's talk in regards to Bitcoin crypto adopters. It's growing faster than the internet and mobile phones. And that's because the world is simply more connected today. A great book, I'm rereading it, is Homo Deus. It's by Yuval Harari. I know he's a World Economic Forum guy. I'm not the biggest or even a fan of the World Economic Forum, but it's a great book. It really tells you what's to come. And also historically sort of relates a lot of things. And of course, Homo Sapien, his first book was about sort of how we ended up here today, and this is all about tomorrow. Homo Deus is kind of this idea of human beings evolving to a godlike, or embodying godlike properties in regards to longevity of life, etc., etc. Knowledge. I don't think we can ever make that jump, but what do I know? I think there's a kind of separation there, and we are limited in many regards. So, as promised, let's talk about the first thing that we said we were going to talk about today. I opened my Twitter and I was just literally shocked with the amount of bears out there when it comes to the Hang Seng. Hang Seng plummets 9.4% in a historic drop. We had a historic drop for the Nikkei the other day, didn't we? That's actually recovered quite nicely. The Nikkei is a short yen trade. We use the Nikkei as a great example of what happens when central banks strengthen their currency through interest rate hikes, when they manipulate liquidity, essentially. The opposite of that is about to take place for markets more broadly. So this is some of the headlines. Hang Seng falls by 9.4%. Its largest loss in 16 years and second largest loss this century. You can see bears coming out the woodworks. Yeah, I'm bullish on China myself. I wouldn't invest in it personally. I think China's a bit of a basket case. Whenever you have a communist-style regime, that's a tricky landscape for investing, I'm afraid, because communism and free markets are kind of opposing ideologies. I'm a free market guy. I would say I'm a capitalist, but I can also see the flaws in capitalism. I don't think Nirvana is for this world, though, however. So I think you need to optimize for what's the best, not perfect. And I can also, like I say, I can see flaws in capitalism. But I don't think we've truly implemented capitalism in the West. I think it's more of a socialism, certainly in the UK. When are we going to do something about this, guys, in the UK? I'm calling my brothers and sisters in the UK. When are we going to say enough is enough with what's currently taking place with the current government and the current sort of state of our country? Your comments in the comment section. Have we had enough at this point? I think we have, and I think we're going to see some really interesting things over the next couple of years. I don't think it's going to take that long, 6 months or so. Looking at the Hang Seng Index, if I was to bet on this, I'd say it's going up. Now, we teach something in our Market Mastery course, of which there is 80% off of. This course is going to put you ahead of the rest when it comes to technically analysing a market, because we break the market down into 4 phases. We show you what those phases are, some rules involved in them, how to track and trace and follow them, and then we make you take a quiz in regards to actually being able to predict what is likely to come next, what phase you're in, and what that means you're about to now enter. And we show you that you guys can all predict the markets with a degree of accuracy. It's not 100% hit rate, because there are times when you'll be in a phase 1 like here and it could potentially continue to sell off, but on balance of probability, I would say the Hang Seng is destined for higher prices. I think this is a range that you've been in, and I think you're ultimately double bottomy. You were always going to find resistance here. It's been very volatile, government intervention. You're just having a pullback, and you're going to see that greater continuation. We'll see if our call on this is right in enough time. But I would expect a pullback here. I think when people react to the news, and this is what we try and prevent people from being, is news-driven traders or investors, or, because you can't really do anything based on that. We try and say to people, look, put on the armor of technical analysis, come look at the chart. Actually, when it comes to the Hang Seng, we are significantly or quite bullish, just like we are for a lot of markets. This is real estate sector. We were looking at this down here on this bullish divergence, and you've broken out into phase 2, in my opinion. So don't worry about China. It's in line with global liquidity, etc., etc. Interestingly, coming up very, very soon, we've got $16 billion worth of funds that were stolen from FTX customers being repaid to them in cash, not crypto. That selling has already taken place. I would wager that there's going to be a lot of this $16 billion that finds its way back into the markets. And this is going to be a very bullish event. And actually, this could be the very event that sees... let's go on the big time frames for Bitcoin. Bitcoin sort of complete this cup and handle. Certainly complete this bull flag to 130. We've got 150. We've got lots of technical confluence when it comes to Bitcoin and the crypto space more broadly. Remember, we were highlighting MicroStrategy going into FOMC. Bit of a squeeze here, continuation pattern. You've broken out of this, and you're likely on your way to $303. We'll see if we get there. Of course, if MicroStrategy is going up, what's the space doing more broadly? MicroStrategy really is just a higher beta Bitcoin play. We've got a number of miners in the Patreon. Do consider becoming a Patreon, guys. Yesterday, we took a quick look at CoinShares report, and we looked at some of the ETPs, and we've still got higher price predictions for these. Something like Mara, we're quite bullish on. I think I've given TeraWolf publicly. This is something that the Patrons have been in, or many of them have been in since the sort of $1-2 range. It's now at $4. So a great return. Actually, some stocks are doing, and this is likely just going to set up continuation here all around your sort of phase 1 into phase 2 break. So I think this is a really bullish event. We will keep you up to date. And I think a lot of this money is going to flow back into the markets. And people say, oh, it's 16 billion in the face of 1 trillion, or what are we, 2 trillion in terms of a market cap today? 2 point something. It's not going to move the needle. It will massively. It's a very low volume, other than a lot of wash trading and things like that, space right now. And I think a billion in the right direction that isn't leveraged and futured and perpetual would do a hell of a lot. So we'll be watching this and seeing how this plays out. Let's move on to the next bit of news that we have for you. An amazing photo here. We looked at this yesterday. If you stop and think about it, the largest asset manager in the world, a well-polished case for Bitcoin to clients with ginormous charts of a dissemination of the dollar's purchasing power since the establishment of the Fed. Life moves very fast. This, of course, is BlackRock. Now, we made a comment on this. We don't believe in the Satoshi story. We think that it ultimately has more nefarious intentions. And I think that there's a number of things that lead me to believe this. The mysterious origins behind Bitcoin. There's many things. One big one is the fact that you have the largest asset manager in the world, the very individual who has been enabled and benefits probably the most from the dollar-based system, now backing the competition. That seems a little bit strange to me. In fact, it seems very, very strange to me. Maybe I'm just too conspiratorial. Who knows? But I would say there's more nefarious intents here. This is why, in my opinion, you have to be either totally biased or ignorant to the poo-poo, the Bitcoin ETF potential success. He's obviously was sort of clowning Jim Bianco there. There's a tweet here. This is from Cointelegraph. This is something that was shown that you're going to see in a minute when we go over to it from the BlackRock presentation. And the crypto adoption is on par with early internet adoption. It's actually beating it by expectations. Crypto owners, internet owners. And you can see this is a trajectory we're on. And the reason I want to highlight this and spend a little minute on this before we dive over to the markets more broadly is because, you know, as a technical analyst, often because I'm focused on the charts and that's what drives my investment thesis. But actually there's something fundamental and sort of revolutionary going on here with distributed ledgers. And it's important not to lose sight of that, I think. I really do think that. And ultimately, you know, we're going to highlight that as much as possible. So what I'm going to do now, we're going to dive into this clip of BlackRock. I'm going to go ahead and mute my mic. We'll get into the clip. I'll play it at maybe 2x speed or something like that so that it doesn't take all your day up. And then we'll finish things off with the chart. So let's get into the clip that we have for you.
It's about societal changes. But what we found with blockchain and digital assets is that in some ways, this is one of the fastest growing technologies we've seen in the last few years. On the right-hand side of the chart, you can see our adoption curve. This is just looking at how quickly certain assets are adopted by society. And you can see that blockchain and digital assets are being adopted faster than major revolutions before it, whether that's the internet or whether that's cell phones. And there's a couple of reasons for this. The first reason is just we're living in a more digital economy than ever before. If we're consuming things online, streaming videos, playing video games, buying digital content, it makes sense to have digitally native assets to conduct those transactions, particularly when there's, secondly, and importantly, in a year like this year, where over half the world's population is voting for new leadership, not just the elections in the United States, in Mexico, in India, and the European Union, we're seeing more geopolitical risk than before, and in fact, declining trust in institutions. Whether that's trust in government institutions for maintaining peace and order, whether that's trust in central banks in terms of keeping inflation under control, more distrust has exacerbated the need for a global monetary alternative. The third we're seeing is demographic changes, the rise of the millennial and Gen Z generation. Millennials, at least in the United States, are set to inherit trillions of dollars, are entering peak earnings years in their work, and are increasingly playing an important role in the economy. And millennials are very different from previous generations because me, were the first generation to be digitally native, growing up with the internet, growing up with computers. We understand digital better than previous generations, and that means we're more likely to adopt digital currencies. And then finally, what I think has been really important to BlackRock in our journey in the digital asset space has been the maturing of infrastructure in digital assets. We've seen billions of dollars move in venture capital and private equity into digital assets to fund incredible innovation in blockchain. We've seen the regulatory environment evolve to get more constructive around digital assets and how people can buy them. We've seen extremely talented people leave traditional finance to go into DeFi to help lead some of these innovations. And all of this infrastructure has really matured over the last 5 years. So between all of these tailwinds, it's really creating the opportunity for digital assets to gain broader adoption across more investors around the world. With that being said, we're in the early days. 2.9 trillion, it changes every day. Maybe it's slightly higher or slightly lower since we made this slide. But we have focused thus far our efforts on 2 digital assets, the 2 largest. We feel that between these 2 assets, which represent about 75% of the market cap of the digital asset space, and have some of the most liquidity in the digital asset space, that we can really start to make headway in terms of bringing out accessible vehicles to more investors.
Just wow, that was a talk given by BlackRock. We've come a long way. Again, it makes me even more skeptical on the intent behind Bitcoin. When we look at Bitcoin from a price point of view, from a technical point of view, when it walks, talks, and quacks like a duck, ladies and gentlemen, it's a duck. Never forget that. Take that with you through life. We've ultimately got a lot of technical confluence in regards to the reasons why we think Bitcoin is going to the upside, whether that's on the smaller time frames, like this sort of pattern that you had here. We were looking at this going into FOMC. Of course, it's broke. And, you know, this is also the sort of splitter of your sort of broadening wedge or very bull flag-esque structure. When we look at the altcoin market, when we look at the general macro, all the stars align. Guys, get ready for an epic bull market. We're going to help you the entire way through it, hopefully by keeping you as informed as we possibly can from both a price point of view and also a news point of view. That's it from me, guys. We've gone on for 16 minutes plus. I'm going to love and leave you on that note. Have a wonderful Tuesday, guys, and I'll see you all in the next one.